So traders, one thing I want to share with you is why I don't believe that we are getting ready for a recession coming up real soon. And I want to show you some statistics. Some people are looking at the inverted yield curve, predicted recession, but not yet. And what the actual past history, what it actually says, if we go back over the past sort of decade or a couple of decades about the yield curve, and when it comes to the recession itself, and what we can expect through here. See, the reason why I'm doing this is because I've done videos and market updates over the last sort of couple of weeks saying that I do believe we're getting ready for some sort of a pullback over the next couple of months, but then I believe we're going to see probably at least another 1 to 2 years worth of movement on the upside before we go into the recession. And the reason why I'm saying that is I'm just looking at the numbers. Okay, so inverted yield curve, recession coming, but incredible boom, I believe, is set in the stage. And I don't want you to be trying to jump in on the fear, right? Jump like, oh my goodness, the market's gonna crash or whatever. I want to try to share with you that yes, you can actually start to put these numbers together actually to see this thing properly, right? So again, the inverted yield curve is predicting a recession, but not yet. And so let me just show you this here. So if we have a look at recessions, right? So we can see this is the yield curve through here. This is obviously the 10 to 1 through here. Can I zoom in a bit more here? Let's actually see if I can do that there, just to make that thing just a little bit bigger. Can I do that? Maybe. Let's just see. Okay, cool. So this is obviously the 10 to 1 through here. So you can see what happened back here, right? So this was obviously the 2020. Look at this here. So but obviously when it gets below the line, just keep it really simple, right? When we get below the line, it obviously it started to predict the actual the recession. But then when we get back above it, well, then we know the recession is actually coming, right? But look at this here. That was 2000. This was here December 2020, right? January 2021 was obviously what we actually got back above there, and then you can see we actually didn't happen. It didn't happen until say May of 2021 that we got into recession there. We can see through here that if we have a look at this here, we were actually inverted here at 26. We got back above slightly, came back down. And as you can see, we're around about this sort of January 27. But as you can see, that was actually January 2007. As you can see, it doesn't look like we were in the thick of the recession until about 1 year later from there. So the purpose of me saying what I'm saying here is that, as you can see, it's obviously this COVID is obviously different compared to what we've ever seen in the past, right? But if we go back in time, we can see when it gets inverted and then we start to climb, like this one back here, is 1989, right? So we got down below here. This is September 1989, and then so that was 1989, and then 1990, and then actually towards the end of 1990, that's when we actually got the recession. So you can see here that looking at the actual recession side of things, it's when we actually get back above here. That's when the timer starts ticking for about 1 year. We're not even above it yet. So it could take another couple of months, maybe more, longer to get to here. That's why I'm saying that I don't believe that we're like when it comes to the recession of things, and we actually go into the recession. I believe the seeds are sown, yes, but it's not until we start to get back above here, as you can see, and even get back above here, and we start to really have a move, right? Move up, and then move up. So you can see that through there. And same thing, that obviously COVID was different through there, but it's not until we get back above it, then we've got about probably 1 or more years before we actually get into the recession things. So people are worried about the recession right now, and this is what I'm seeing right now. If I go back down to here, same sort of thing, right? We've got down the bottom here, and as you can see, this was what's that? This is at the start of 2000. It was inverted, but it wasn't until the middle of 2001 that we actually got the thing through there, right? And as you can look at this here, the inverted yield curve happened in this. It's firstly inverted around February 2006. It wasn't until 2008 that we actually got the recession coming. So same thing through here, right? We're not back above it yet. So, but we could be getting ready for that move to getting back above it. And we can see that by looking at this indicator through here, it's actually telling us that One, the timer has started ticking, but it's not the real time, right? We need it basically back above the red line. I'll keep it really simple, back above the red line. When we get back above the red line, then we know we are setting we're about 1 or so years from there. So we're not above it yet, and that's why I truly believe that regardless of what you see or hear, I'm just looking at the numbers through here, and this actually tells me that even though things may be whatever you think they are, that's why my market updates in the past have been where I see that yes, on a short-term technical level, we're overbought and we need to have a little bit of a pullback. But that's where I looking through here, we're not even back above the line yet. So looking at that, to me, it actually just says that we're probably getting ready for after we get that, we're still got probably another year before we actually get into the thick of the recession. That's why I truly believe that the recession, I believe the recession is really going to hit hard, probably towards the end of next year into 2026.